India, and you're watching our show Perspective, where we bring you detailed analysis of key national and international issues as well. Today, we're going to talk about India's economic growth. In fact, India's economy grew at 13.5% in the April to June quarter of this fiscal. This was led by higher household consumption, especially of contact-intensive services and buoyant investment activity as well. Now, the corresponding April to June quarter of last year had recorded a GDP growth of 20.1% and an 18.1% uptick in the GVA amid the second wave of COVID-19 pandemic. Now, the GVA from agriculture, forestry and fishing rose 4.5% in the April to June quarter of this year, while manufacturing and mining grew at 4.8% and 6.5% respectively. While the share of government final consumption expenditure in GDP moderated to 11.2% between this April and June from 12.6% rather last year, GDP growth was in fact boosted by private final consumption expenditure, which surged to 59.9% of the GDP from 54% in Q1 last year. The share of gross fixed capital formation, that is GFCF, which reflects capital investments in the economy, also improved to 34.7% of the GDP in first quarter of this year from 32.8% in the corresponding period last year as well. The Reserve Bank of India had estimated 16.2% growth for the first quarter this year and 7.2% for the entire current fiscal year. So what do these figures for economic growth in the first quarter of this fiscal year indicate, and what lies ahead for the Indian economy? For more on this, we're joined by a distinguished panel of experts. Let me first introduce them to you, beginning with, we have with us Shubhmoy Bhattacharjee here in the studio. He's consulting editor, the Business Standard. Welcome, Shubhmoy, to Sunset TV studios. We're also joined by Mr. Sandeep Agarwal. He's the chairman, Industry Affairs Committee at PSD Chamber of Commerce, and Ms. Bidisha Ganguly, the chief economist with CII, is also with us. Welcome, both of you as well. I'll begin with you, Shubhmoy. I have, given out a lot of numbers and a lot of figures here. So help me make our viewers understand a bit more, in a bit more clear manner, as to what these figures mean. Where do our economy stand with these figures of the first quarter?
That's a good point. In fact, as you were reading out the numbers, I thought that's necessary to unpack them. And when we say we want to unpack them, what does it mean? It means that, first of all, the numbers show that the Indian economy, first of all, has come over the COVID impact of 2 years. Now, when we say that, that is actually a very solid statement, because there are lots of economies, even developed economies in the world, which are still not over the hump of the COVID impact. So that's something very major to say. When we say that, what does that mean also in terms of how the overall economy has done? The key thing which everybody was looking at is how have the average households borne with this cyclone of 2 years? Well, it just shows, as your number just showed, that the private final consumption expenditure, which actually had shrunk 2021, even 2022, I mean, the numbers are still upsetting, but whether it shrunk or not, but in 2021, it had definitely shrunk, has clearly begun to rise.
Okay.
It's a very tepid rise, but it has begun to rise. That is a very major takeaway, that the household income is not being battered. It is actually on the mend. That's a very important takeaway from this GDP numbers.
Okay.
And I think that is the most important thing to remember, because other than the fact that which has been already been announced in the budget, that the government has actually started raising capital expenditure, and that is clearly showing this was the metric which at least I, and I think lots where people were actually looking at, is that whether households are still hurting from the 2 years of COVID lockdown in different parts of the country.
Okay.
So that is what
that's the most positive, of the metrics there.
Absolutely, and that's the most significant development or most significant number which I taken from the numbers that were released yesterday.
Okay, okay. Ms. Ganguly, One is, do you agree with what Shubhmoy is saying here in terms of the statement or the fact that, Indian economy seems to have overcome the pandemic shock, the initial pandemic shock, which was there, which the entire, global economies, be it developed or developing countries or even underdeveloped countries, all of them felt that shock. Second part, as Shubhmoy is referring to it, that the most important aspect is that the average household seems to have recovered at a micro level, and that is why overall the economy seems to be recovering.
Yes, certainly. Shubhamoy has made a very important point that we are over the COVID hump and we are on a track to recovery. But looking at the different elements of GDP, there is of course consumption expenditure, which is done well, but there is also investment expenditure, which is very critical for the economy, because that really leads to, without the private sector, corporate sector investing, we cannot have a complete recovery. And that has also done well, which is really very good for the economy. And I think with consumption doing well, it will be very encouraging for corporates to expand their investment. We know that the capacity utilization levels in the economy have been going up steadily, so that corporates can now expand capacity once they're confident of the demand coming to them.
Okay.
So there are different situations in different sectors, but I would say that overall there is a fair amount of confidence of demand moving up, and therefore corporates are in a good position to invest. And from CII, whatever surveys we have done among our constituents, the companies are very enthusiastic and are keen to invest in the economy.
Okay. So the GFCF is also an important factor, which indicates how the capital investment is coming, as Vidisha is referring to. I'll come to you on that, but let me bring, Mr. Sandeep Agarwal here as well. Mr. Agarwal, your analysis of the figures of the first quarter in the manner as both, Ms. Ganguly and Shubhmoy is referring to, that we are towards, the mend here and on a very strong foundation.
Yes, the economy is over the hump. We are 3.74% above the 2019 levels. So now we can very well assume that the Indian economy is resilient. The other countries are still facing the brunt. We have faced the COVID brunt, then this oil shock, that prices have really gone up like anything. But still, the economy is doing very well. The only small issue is that our imports are growing at a much faster pace than we should be comfortable with. Actually, we should be increasing our exports much more. But looking into the current export positions in the first quarter, we may not be able to match the import pace. So therefore, that is a small negative right now.
Okay.
Initially, for any economy to grow, healthy imports are a good sign. Because if we are not even able to import, then there is no question of growth and increase in exports. But in future, we hope and pray that our economy, we as manufacturers, are able to meet the expectations of our government, that they have given us easy money to import, so that we are able to export by making products out of it by huge value addition.
Okay.
And I believe we are doing our best. Indian exports to US market are growing steadily, which is the biggest market in the world. To EU, it is growing steadily. And with the new agreements with UAE and other countries, UK, we are hoping to get soon. The country is for sure going to achieve at least 25 to 33% more exports this year. Then, having said that, in the next years also we will need to keep up this export incremental pace.
Okay.
So that the country is not deprived of foreign exchange. Our stock, foreign exchange money remains stable. We have $600 billion or more of foreign exchange reserves with us, so that no country or issues like oil shocks are able to affect us like they have done for countries like Sri Lanka or even Pakistan or even many other countries, even countries in Europe are facing a lot of trouble because of this oil shock.
Okay.
So the country is resilient. We are going to win.
Indeed.
That's what we can say.
Indeed, there's no doubt about the economy and the common people being resilient as well. Now, Shubhmoy, I'll come to the sector-wise aspect as well. But before that, let me bring in those GFCF numbers which Ms. Ganguly was referring to. And in addition to that, let's also, look at those numbers along with the government expenditure as well. There seems to be, sort of a bit downward movement in the government expenditure, around 11.2%. If you look at the corresponding period, somewhere around more than 12% there. But the GFCF numbers, the private investment, the investment which is coming into the market or into the economy, that seems to have seen a lot of surge.
Yeah, so taking the government final consumption expenditure, which has come down from 12.8 to 11.2, now that is, I would say, rather healthy, because in the sense, that was the expenditure that was holding up the economy during the COVID years.
Okay.
The consumption expenditure of the government is not particularly something which is, well, it has got a multiplier effect, but it's possibly much less than what Vidisha was referring to, the investment expenditure of the government. And since that is growing, and that has grown up to something like from 24 to almost like 28%. So that is a very, very impressive number growth. We would stay with that. The government consumption expenditure actually going down is actually very interesting, because you know that this time the government is giving subsidy both for fertilizer, enhanced subsidy for fertilizer, enhanced subsidy for food grain. And despite that, if the consumption expenditure is actually softer, it allows the government space in the later part of the year to keep on giving those subsidies without having to hurt its fiscal deficit. Okay. So it's actually very good. The investment expenditure having risen, the interesting thing is, and this is where what Mr. Agarwal was saying, that our imports are rising. Now, this is not unfortunate, but it had to happen because the private sector actually had underinvested in capacity expansion. And we are paying the price for that. When the economy is rebounding, demand is increasing, products are being needed, there is no way, because of the lack of capacity, that those can be bought from within India. So those who need those products, intermediate products, are turning to imports. This is not oil import. This is net of oil, net of gems and jewelry, net of gold. Even then the imports are rising. And why is it rising? Because the capacity that the private sector had, which they could have actually built on at this time by having expanded capacity, they didn't do so. Okay. And because they didn't do so, therefore, when the economy is now on a rebound, rising up, they are not able to meet the demand. So the import is rising. So I think that is something which needs to be really looked into.
So interrelated aspect here would be, when we are looking at the sector-wise numbers, manufacturing right now is around 4.8%. So you're saying that if we need to do better, perhaps these sector-wise figures will have to go much higher, manufacturing specifically.
Absolutely. I mean, look at this. Look at the excess capacity which is there in agriculture, which is why we were able to export for some time. But look at the capacity of the manufacturing sector. There simply isn't any excess capacity, or rather, because they haven't built up. And that is where the problem is. And that is where the opportunity also is. That for the private sector to realize that you can't be very short term. You need to think long term and build up capacity for the long term. Because waxing and waning of capacity, and given the fact that India is now in a very sweet spot, it can afford to be the manufacturing powerhouse. Industry needs to steel itself to be able to expand capacity and take on periods when there is a slack in demand.
Okay.
Otherwise we will not be able to take advantage of that. Okay. Because the government is running full steam. It is actually expanding capacity. If you look at roads, if you look at railways, if you look at all the other sectors where the government can make extra addition, power sector, it's expanding. But we need to see a very rapid scale up. Vidisha was, of course, referring to the fact that the order books are looking better. In fact, today's data that has come out from the Purchase Managers Index, which shows that India is at 5.62 56.2 compared to 56.4, which shows that Indian capacity manufacturing order book has rapidly expanded. And that is actually quite in contrast to the rest of Asia. In rest of Asia, the order books like China, for instance, it is less than 50. The numbers is 49.4. South Korea, it is at 49. So order books there are looking bleak, whereas order books in India, and the only other country which is comparing to India is Thailand, but it's much smaller level. Indeed. So Indian order books are actually looking very good. But this is something that we need to really build up.
Okay.
And here is a wonderful opportunity to do so. Because remember, we have got 2 years when actually nothing happened. And the time to build is now.
Build up on this opportunity there. Ms. Ganguly, would you agree to what Shubho is saying here, that investment is perfectly okay, wonderfully, doing wonders for the economic growth as well. But the private sector will have to put a bit more focus when it comes to the manufacturing, area, and there a lot of focus needs to be given in terms of enhancing the capacity and, of course, the output as well.
Yes, certainly. The private sector is very happy with the policies that have been put in place. For example, the production-linked incentive. Many of the companies in those sectors have taken advantage of these incentives, and they are ramping up capacity. If you see in the electronic sector, for example, our exports have been going up. Our production has been going up. And that is because the private sector has ramped up capacities, including investors. And I would say that imports going up right now is simply indicates that if imports are rising faster than exports, it simply indicates that domestic demand is growing at a faster rate than external demand. We know that the global economy is slowing down. There will be an impact on Indian exports, which did very well last year, but we cannot sustain that growth rate in the current year simply because globally we know that the US is slowing down, the EU is slowing down. These are some of our major markets. So even we will have to really ramp up our market share in global exports, which we are trying to do. For example, in sectors like textiles. Or I mentioned electronics, many other sectors where there's great potential.
Okay.
And of course, we will have to do, a much better job of improving our competitiveness, which has elements of both, factors which are within the factory as well as outside the factory.
Okay.
Outside the factory, you have the infrastructure, the congestion at the ports or the roadways, railways, etc. We still have very high amount of freight being carried by road, whereas globally, freight carried by rail is much more efficient. So, but these changes are happening.
Okay.
The government, for example, is looking at GDP in a big way, which will affect the logistics sector and make it much more competitive. But these will take time. It cannot happen overnight.
Okay.
But certainly the private sector.
Okay. Indeed, there has to be a focus there. Mr. Agarwal, your views on the sectoral growth when we are looking at various sectors, manufacturing, services as well, and of course, agri and allied sector, there seems to be also a lot of movement happening. How do you see things moving ahead from here onwards, and what needs to be done?
As far as the manufacturing sector is concerned, we believe that the PLI scheme is a game changer. There's no doubt about that. It has come in so many, in pharma, in electronics, in telecom, in steel, specialty steels, and we believe that it should come for many more sectors. And sub-sectors within the sectors, it should also come. And government will look into the benefits which are coming out of it. Because as we have rightly said, that import surge is showing that there is demand in the economy. So therefore, there will be investment into the economy. And this investment is going to surge our exports also and our GDP also. Yes, having said that, we also know that the international market prices are coming down. They are cooling down. So therefore, the margins of Indian exporters will also be feeling that pinch. So investment will not only come from our own resources. They have to come from financing from banks and others.
Okay.
It's a good thing that at this time, the markets are booming. So because the markets are booming, the industry would be able to find funds at this level to fund for the investments which we are going to do to increase our domestic production, decrease our imports, increase our exports. As far as the services sector is concerned, I believe that services sector, what they really need is the support of the government in not interfering. That is what they always want, that the government should support them in the international agreements with other governments, that there should be free flow of our manpower to their countries whenever there is project demands, etc. Most of the countries are putting restrictions. US, Europe, they are putting restrictions. European visas are not available most of the time. So service sector is feeling that pinch. That is where the government should work for work visas availability for Indian service sector exports. That is very important.
Okay.
And then as far as the agri exports are concerned, first we need to reduce our imports of palm oil, etc., by increasing our local production. And then we should also increase our exports of sugar, which we are doing, wheat. Let us not keep unlimited amount of wheat in our stocks. We are having good stocks. This is the right price when the government can sell wheat, which is being sold. But we believe that we should not end up with too much of high stock levels at the end of this year, because these prices are not going to continue for a long time.
Indeed.
Similarly, for fisheries and other sectors, the support of the government in providing this PLI scheme is part of it. And wherever the Indian fishery sector is facing problems because when they are going out, they are going long distance. There are problems in getting permits to go out of the territorial waters also. And all these things should be taken care of, which we believe our Minister Piyush Goyal, Minister for Commerce, has been taking meetings of industry every month and going deep down, drilling deep down into finding the cause and the reasons why the slowdown in the exports is there. We know the slowdown, the reason is that the world economies are coming down. So today, the most important thing is that the Indian economy has to produce goods at world price. So we have to keep on improving.
Those are the areas which will have to be focused upon. You're right, Mr. Agarwal. A lot would have been done, would need to be done from both sides, the government and the private sector as well. There is always a scope for improvement. Quick concluding comment from you, Shubh, before we bring this discussion to an end. In terms of what's the long-term and short-term lookout when we're talking about the Indian economy's growth and resilience as well?
The first thing that people will always want to know is, what does this mean for their inflation? And that's a very big elephant in the room. That with the inflationary pressures, as they have started easing, would that easing continue? Hopefully, as more goods and services come into the production, come into the economy, that should ease. So that should be a cause for comfort, despite the disruptions in world oil prices. Remember, the oil prices have not been moved by the government for the last, since April. So that's something
technically the government doesn't move them,
and the government doesn't move them. But the prices being there constant does mean that there's a level of comfort. So what does it mean for other sectors? So that's something that hopefully these numbers would show, that more production is there, and that should be a cause for short-term as well as for medium-term comfort for most of the economy to be able to start producing basically more, going about their activity. And I think that's a very important takeaway from here.
So strong foundation, hopeful about the future, both short-term and mid-term as well. Thank you so much, Shubh, Ms. Vidisha Ganguly, as well as Mr. Sandeep Agarwal, for sharing your views and insight, as our experts were pointing out, and sort of debriefing those complex figures or numbers when we're talking about the economic growth and specifically the first quarter data, which has just trickled in of 13.5% growth. The projection is approximately more than 7% for the entire fiscal year. There are several factors which will have a lot of impact on how our Indian economy grows in the next quarters as well, and various areas where a lot of improvement can be done. We'll keep a close watch on all the developments here and bring you more details and analysis, not only on this, but on other topics of interest as well. Till then.